At 6 a.m, the dollar woke from its slumber and jumped from 77.5 to 78.5 US cents because the Federal Reserve minutes came out and they were more dovish, as they say, than expected. Dovish is the opposite of hawkish and means less inclined to increase interest rates, so the US dollar fell. And then at 3:30 p.m, Standard & Poor's put out a report here saying that the Australian government's budget problems put our credit rating at risk. And since S&P does the rating, that was taken seriously, so the dollar fell back below 78 US cents and then recovered to finish steady on the day at just above 78, which, as I keep saying, is where it's been for a month or so. On global markets, breaths are being held while the European Union weighs up Greece's request for its rescue program to be extended, minus the austerity. And this graph puts Greece's predicament in context. It shows that its economic depression since 2008 is equal to America's depression after the crash of 1929, which resulted, of course, in what's called the New Deal. And that's what Greece wants, a New Deal. On the share market, there was a flood of results that cancelled each other out, so the All Ordinaries finished roughly steady. Wesfarmers reported a 4% drop in profit, but Coles lifted profit 7%. AMP's profit jumped 32% and the shares closed at a new 5-year high. Fairfax's profit fell 86% because of one-off charges, and the market knew that was coming. Virgin made a profit instead of a loss, and IINet's shares were smashed after the company only managed to lift profit 1%. And finally, this is CNN's fear and greed indicator based on 7 market indicators. It's currently showing extreme fire danger or greed. And you know what Warren Buffett says? Be greedy when others are fearful and fearful when others are greedy. And that's finance.